Yo, what's good everybody? So in this video, what we're going to be covering today is pretty much our entry levels and where we're going to be looking to take trades from. So when it comes down to looking for these entry levels, we're only going to be entering trades off of these very specific levels because these are going to be the highest probability trades that we could potentially take. Now, when it comes to these higher probability trades, this is typically when I like to use a lot of size in my position sizing when taking these trades, because again, the probability is outweighing the negativity of the specific trade. So the first thing that I want to actually cover is a trending condition. As you guys can clearly see here, this is silver, by the way. So XAG USD, this is the commodity silver. What you can actually notice from this chart is that price has been moving sideways since pretty much, what is this, 2020? So price has been pretty much moving sideways since 2020 at its original highs at almost $30 an ounce, which is crazy to see that silver hasn't been able to break $30 an ounce. And now it's 2021 December, and it looks like it's going to go down to its original lows. That's besides the point. So what I actually wanted to cover basically is a trending condition and our best opportunities where we're going to be looking to enter within these trending conditions, right? So typically when we see a trending condition, we're going to see market do something like this, where it's making higher highs and higher lows, right? Your best trading opportunity or entry zone is going to be all throughout this range here. Mainly this top range is where you're going to be looking to start taking your buy positions from. Again, pretty much just waiting for price to actually come into the zone where you would be looking to take a buy and looking to target probably your previous high here. I kind of wanted to just get that out of the way. So when we're actually trending bearish, lower low, lower high, lower low, our best entry opportunity is going to be at our previous lower low, looking for price to form that lower high where we could actually look to take that sell position there as well. So what we're going to be covering again is going to be our entry zones. And the very first thing that we have to do are mark off our major levels of supply and demand and support and resistance. So again, how we do that and how I like to do this is basically looking at the bigger rejection areas. So the first one I see is right here. We have a big rejection, another big rejection at the same level. Rejection here, here, then here, as you guys can see. So that's where I'm going to be placing my first level. And how I'm going to place this level, I'm going to lock it first of all. I'm going to go into settings and then put daily at 22.00. We'll put 22.00. Right, it's not $22 flat, but it is 22.1. So this is the first level I'm actually going to put. I could even maybe put it down here, probably a little bit lower. So let's unlock this. Possibly even right here would probably be a little bit more accurate there as well. So I'm going to actually place this, let's just do it right here, just maybe a little bit lower. I'm going to lock it. So that's my first level, and again, I decided to actually place that level here because of all these rejections. So initially, when price is actually going to be able to go down to that area, we're going to be able to look to take buy positions from that area. That's my first initial reaction that I'm getting from that specific level. Now that we have our first level actually placed, we pretty much are starting to set a foundation for where we could actually look for future trades. So I'm actually going to look to set another level, which is going to be up here. We could even say right about here. You could set this level. So I'm going to set it here, and I'm going to make this, let's see, what could it be if we take it up to 25? 25 would be a little bit high. So I'm going to leave it right there. Again, we're going to lock it, and we're going to type daily, this is 24, almost 25, right? Now, it's probably better we put 24.8. We're going to lock it there, and now we have our second level placed. I decided to place that level where it is, mainly because of relevant price action, where we see this rejection. Then we have support. Again, look at that, support. So notice how once price actually broke under and came back above, the best thing for you to do in this specific situation is for wait for price to actually come back down, test it to see if it would hold the support, and your job is to try and buy somewhere in this area here so you can actually make money off of this move here. So if I were to just go to like an hour time frame where I could break that down a little bit better for you guys, you could see, right? So notice how on the hour it looks a little bit funky, right? But if you were to go back up to the daily time frame, it looks very, very clean, a retest of that area and then a continuation back up. So let's go back to the hour so you can see it. You can see the big differences there. Right here. So look how many times once price broke back above, it retested this area and it held. So your job is to try and get in on a buy in this area as best as possible. Also notice how price is actually trading under here. That's because this is a level on the daily. If the hour closes under, then that's perfectly fine. It's not always going to look perfect. You have to remember, this supply and demand is going to be an entire zone. It's not going to be a specific price, but more or less a zone. We like to use specific prices so we can get an entry as best as possible when we're looking at the higher time frames. So your job would be to look for an entry somewhere along this area here, right? And the thing about looking to enter, right, all time frames have to be in sync, right? The daily time frame has to be in sync. If you see price on the daily time frame, we're looking at this area here. If you see price close right here at this area on the daily time frame, then you could be like, okay, well, price already closed on the daily here, so the next day could engulf. Whether this day is just fluctuating, which is most likely going to be the case, right? It's not ready to go up. The next day has to open up, form its lows, and then it could actually go up and form the highs. So it's all about timing and patience, right? Because notice how you could have taken an entry off of this level. Again, once price closed above on this level on the daily, you wait for the pullback to this level, where sure you could have taken intraday trades like, hey, we're going to sell back to this level here. When it gets here, we're going to look to buy, right? Sure, you could have done that, right? But let's just say you take a long position here, you take a buy somewhere along this area here, you put your stop loss under the lows, and you actually target the highs up here for 3 times your risk, right? Let's see how long it actually took for this trade to actually play out. So for you to even be in profit, it took about 7 hours. Then for you to actually be in profit where price is finally going in your direction, it took about 14 hours. And then notice how price actually went up. So it took about 20 hours for this entire move to actually play out, which I have zero problem with holding a position for that long if I'm going to make the money off of it, of course. Right? Patience is a big thing when you're taking trades off of these major levels, and you have to be able to hold your trade through. Right? So now again, it comes back down to our entry candlesticks. We're going to be looking for price to trade around these levels, and we're going to be looking for signals like this: engulfing number 1, engulfing number 2. This is actually a super strong buy signal, especially that we're trading at this level of support. Super strong buy signal here, right? Why is this? Because again, look at the rejection. There's the downside, and then notice how buyers brought price all the way up past the open and close within the top 1/3 of the actual wick from the open to the highest high. Notice how price closed that strong. That is a super strong entry signal. It's a high probability entry signal. And then notice how it closed above this range here that I did as well. Then price gave a little pullback and a continuation higher. One thing I want you to pay attention to in detail here is notice how price closed here, then price closed here, then price made a low here and made a low there. So just pay attention to this detail and this market structure within this hour time frame. What does this look like to you? Right? Your initial reaction should be that looks like a higher high, higher low, higher high, higher low, meaning that the 15-minute and the 5-minute time frames are making higher highs and higher lows. These are very strong signs of bullish momentum and that price is going to continue in the opposite direction, right? So again, notice the break above this high here, pullback, retest, and then engulfing. This would have been another sell or another buy signal right here, a high probability engulfing candlestick. Now, if you would have taken a buy there, what you could have potentially done is taking your buy here, your stop loss go a little bit under support and a little bit under this low here. Then you could have had the same target or even targeted the actual high itself, which would have definitely been hit way later on. But I just wanted to show you guys this, right? So let's kind of erase that. Now let's kind of continue. So that would have been, again, that was an area where we're going to be looking to trades. This is where what I call our entry zones. Anything in between, you're gonna have to really focus on an intraday perspective. Now, notice how, let's just say we're on the daily time frame right now currently. Let's take a look at closer price, because we have our long-term areas where we know we could look for reversals, and now we're going to look for our short-term areas. So notice how first reaction right here is that price is currently trading at a level of support and a level of resistance. So notice how price so far is already rejecting this area right here. Right, notice momentum significantly slowed down. I'm gonna actually lock this as well. Right, we can even go to a 4-hour time frame, see what's going on here. So notice how last time price was trading in this zone, we had a big move to the upside. But one thing to keep in mind is that price is making lower lows, lower highs, lower low, right? So now we're setting our more major levels on the daily time frame. Then we're gonna set our a little bit more minor levels on the 4-hour time frame. So unless price breaks these two levels, then what you're gonna look for is to set other levels that are a little bit higher or a little bit lower than when you have your two main levels. Your two main levels is what I call the foundation. So I'm going to look for another price where we could see the market actually be indecisive at. And I'm going to come to the conclusion that that's actually going to be right about here. So 25. So that would be the next area where we could look to actually target, right? Which would be, again, another entry zone, right? So this is going to be daily 25. Close that. And then let's look for one more, which my immediate reaction is going to be this next level of support. So, okay. If you have trouble ever looking for levels, just zoom out. Once you zoom out, you'll see the bigger picture of things. So yeah, definitely right here would be my next level. I'm going to put another level right here, which is going to be 18. Can we get 19? Yeah, we can put it right here. So 18.95. Let's kind of zoom in a little bit. That's perfect. So 18.95 is going to be my next level. 18. Going to do daily 18.9. And again, we're still setting up our levels because it's also important because these levels are going to be our same targets, right? But I want you guys to have your higher time frame foundation set up first. So yeah, this level's fine there. Let's go back to current price action, which is going to be in this area here. So we have our foundation, which is going to be here and here. And then we have our other levels where we could wait for price to actually continue to go up. We can even put one more on the top. We could put one probably, yeah, right here is good. This is going to be 28. So daily 28. Press OK. Then we lock. Okay, so now we have our foundation. Now we have our more major levels where we could look for indecision. Now let's go get into our more minor levels so we can actually look to take day trades off of these levels. So when you go to the daily time frame and you look at more relevant price action like this, you'll actually start to see more minor levels here. And what you can actually do, what I like to do is actually draw zones. So I'm going to draw a zone from this point to this point. Right, and then you'll be able to see small indecision with price. So notice how price currently is at a level of support. How you would really set up your trades is, okay, price is at support, right? Price is currently trading at support right now. So I'm only going to be waiting for one or two things. I'm going to wait for price to see if it could pull back up into this other zone, which again, if you go on the daily time frame and you look at it, we have support, resistance, resistance, support, support, and then we have a very clean break, right? So this is a major level with inside of our current price action, right? And again, we're taking trades off of these levels. Notice how we have resistance, resistance, support, support, support. So this is a more major level within current relevant price action where we will be taking trades off of. So now that we have our entry zones, we know that we're only looking to take trades with inside of the zones that we currently have set up, right? So really you have one or two options. In a situation like this, how the weekly closed with a very strong bearish variation, right? We have actually even weekly support right here. We're going to have to see because the month is about to end, which I'm not trying to bring in, other topics, and I'm just kind of trying to focus on our entry zones here really. But looking at how prices rejected the highs, we could definitely see a little bit of a steeper pullback for commodities. And in a situation like this, right, we could actually see silver pull back to about $20. But anyways, let's kind of just continue with the video. So again, now that we have our zones marked off, we're really only going to be looking to take trades off of these levels here. So now that price is currently, my bad, I had to pause the video. But anyways, now that price is currently trading with inside of these zones, again, I'm going to repeat this one more time. These are going to be the levels we're going to be mainly looking to take trades from. Why? Because we're taking trades at levels of supply and demand, and supply and demand is the way the market moves. We shouldn't really be taking trades at any other level, right? There's going to be levels that are more important than specific levels. Like these major levels are going to be more important than this level or this level, but these are going to be our intraday levels, and we're going to be using these as entries, stop losses, and targets, which right now I kind of just wanted to go over the entry zones. So these are going to be all of our entry zones, and these are going to be our more relevant entry zones. If you missed a trade and you didn't take a trade from that zone, then you're not looking to take a trade there. Just wait, come back the following day, right? So, I mean, there's many ways you can actually play this. Like here, there's a minor level of resistance on the hour time frame. I don't know if I personally would have taken a trade here. That's just me. But there's multiple things you can actually wait for nowadays. So one thing, well, not nowadays, but there's multiple things you could wait for, and how you could actually set up your trades around these areas is, okay, I have two options here. Price is in a very strong bearish condition as of right now. We know the weekly time frame has just closed. So most likely what's going to happen is a pullback. Where could we pull back to? That's going to be a great question. So a more major level would be to wait for price to come all the way up to 23.8, which is where we have this zone here, which we can then look to actually sell back down into 22 or 23 flat, where we could actually take profits at, right? Or what we could wait for is a break of this level, a retest of this level, and look to take price all the way back down to 22, to this daily level here. That's how I would be doing things. But again, these are just simply our entry zones on the daily, on the 4-hour time frame. You can also have like your hourly intraday moves, right? This is really going to be more or less for like very tiny moves, right? You can have a break and retest of the support here. So this is an intraday level. So you know that you could actually potentially look to take price from here all the way down to this low here and set up your risk to reward however you'd like. But those are just kind of intraday levels. I'm not really looking to take trades at those very minor levels because the probability just really isn't that great. We're only really, again, looking to take trades at more major levels where the probability is a lot higher, right? And what we could do is look for entry based off of those smaller time frames. There's, again, many ways that you could actually be taking trades from here. Let me give you another example. So I'm going to move over to gold. Right, when it comes down to gold, if you look at the daily time frame, right, maybe like if you're a little bit newer, you might not be able to spot the trade very easily. But this level, 1795, we have resistance, support, support throughout this range, resistance, right? Notice how price actually came down, closed under 1795 resistance. If you go to a 4-hour time frame, you can see a nice sell signal right here, bearish variation pattern. What do you do in this situation? Well, price was trading down here at one point, so let's just actually wait. And by the way, this big wick is actually just news, right? The best thing for you to do in this situation is wait on the hour time frame for price to pull back into our 1795 level, where we can look to actually take a sell. Now you ask yourself, okay, well, where could we possibly sell to? Well, we could actually look to take a trade, and again, I'm going to use a long and short position. We're going to look to take a trade here at the level. We're going to put our stop loss a little bit above the level, so about maybe 50 pips. Let's leave it at, right? And our take profit could be down here, right? So I'm actually going to give it a little bit of a bigger stop just because gold, again, has a lot of volatility to it recently, as you guys could see, right? I'm going to give it a little bit of a bigger stop, about 80 pips, and I'm going to look to gain 4 times my risk on this position. Why am I targeting 1760? Because that is our higher low point. That is our low for November. This is the higher low for November. That is the lowest price that price has actually reached within this specific month. So that's actually going to be my target. And again, all I'm doing is setting up different areas for me to actually look to take a short. If I'm wrong on this position, this is very strong bearish momentum, right? We've pulled back almost practically 100% from the actual move of November. So most likely, again, the probability outweighs the probability to go short outweighs the probability to go long on this specific trade. And again, you just have to ask yourself, why is the probability higher on this side than this side? Well, you have a big bearish move that's pulled back all the way back into support, and then you have a big rejection of the November higher high from October 21st, which the November higher high is also here as well, which is insane. So it's just you building a case as to why you're going to be taking these trades, right? So last but not least, that pretty much sums up the video, and that's how you'd really set up your trade. So hopefully you guys understood the entry zones. In the next few videos, we're going to be looking at specific entry signals. And again, these are going to mainly be trades based off of higher time frames, such as the 4-hour, the hourly time frame, where we could look to take these positions. And if you're someone that's like, okay, well, silver's at support right now, I'm going to buy support and target resistance, that's perfectly fine too. Look what happened last time silver was at this level here, had a big move back up to resistance. Is the probability for that to happen again likely? Yes. Why is that? Because the market tends to repeat itself. It's as simple as that. So you're really just planning out how you're actually going to be taking these trades. So there's going to be multiple people taking multiple trades. Some people are going to say I'm going to buy silver right now up to this zone here, right, where I'll look to probably sell. If we reject this area, great. Some people are going to be like, well, I'm just going to wait for silver to come up into this area here and then look to sell back down into this area. Great, that's a different trader. Some people are going to be like, I think silver's going to break this area, so I'm going to wait for it to pull back into the area where I'll look to sell again, and then I'll target the next level of supply and demand, which is way down here. And that's just absolutely great. You know, everybody's going to trade very differently. What we all have in common is the end goal is to make money within the market. It's almost as simple as that. So anyways, I'll talk to everybody in the next video where we're going to be learning about entries.